Let's talk about whether or not the initial public offering market, IPOs and SPACs, are they signaling a bubble-like market that we saw like back in the late 1990s?
Well, I think, Don, what you're seeing is this could be the beginning of the roaring 20s. There's a lot of capital that's been sitting on the sidelines for too long that's looking for high-quality companies to bring to the market. Valuations are high. Interest rates have been incredibly low. There's pent-up demand, and there's a real opportunity for attractive equity to enter these companies and help them grow. We've seen $80 billion that's been raised in the SPAC market. And these are high-quality sponsors that are going out to find high-quality companies to bring to the market, and that really works for both the companies and for investors.
It seems almost anecdotally like these days, Daryl, you hear more about companies coming public through SPACs as opposed to the traditional IPO process. What exactly then does that tell you about maybe the overall market valuation, or is it simply a cost feature and maybe more of a logistical issue, a preference to go SPACs versus IPOs?
Yeah, I think there's a preference. I mean, if you're a company that has not been in the public markets, you want to sponsor. And a SPAC allows for a sponsor to work with a company over months, maybe even a year, to help them, prepare them, get them ready to go public. I mean, it's kind of like if you were to apply to college and not have a guidance counselor. That's what it is to work with an investment bank. But here, having a trusted, aligned sponsor working with you really does improve your chances for success.
So there's also a case to be made. I've spoken to some folks out there who say that the traditional IPO process, the one we've come to know so well over decades now, provides more transparency, gives more news and data out for investors out there, not just the institutional ones, but folks out there like you and I who are, or maybe not you, but for me, who don't exactly know that much about a company, who haven't been part of the road show, who haven't seen that level of scrutiny from all kinds of investors. How exactly then does that resonate with you? SPACs basically have one sponsor, they take it public, and then it's just a public company.
Yeah, Dominic, it's a great question. But there's the same threshold required for information disclosure for a SPAC as there is for an IPO. The banks wouldn't like you to think, that it's a better alternative. But one of the things that's true about a SPAC is that when they become public, they can actually share their projections with investors before they go public. In a bank, it's behind a wall, it's among analysts, and it kind of comes out in a way that isn't very direct. This is a company sharing with you what their financial objectives are, for the next 1, 2, 3, 4, 5 years. So as an investor, you know what you're buying.
Now, I'm also curious here. You've seen what happened with the IPOs for Airbnb and the IPOs for DoorDash, just among others. I mean, we could go into Snowflake and everything else out there. Is there a case that you're seeing here right now, Daryl, where those types of IPO performances, not just in the pricing, but in the first trade and beyond, signal that this is very much a market that may be overvalued, in your opinion?
Yeah, that may be the case. It also may be that the bankers wanted to undervalue Airbnb. I mean, if this is what the market says that company is worth, well, that's the value. And, in a SPAC contest, I like to call SPACs IPOs in slow motion. And it gives everybody time to really understand the company that's going public. In Airbnb, if you were an IPO investor, one of the few that's allowed to truly get those IPO shares, you really didn't know how much of the company you owned and at what price until the day after the deal was done. In a SPAC, the capital you commit, you're getting specific shares at a specific evaluation. And that really just sounds like it works better for everybody.
Shepard Smith here. Thanks for watching CNBC on YouTube.